The Federal Reserve sent a sign out today that the fight against inflation may have turned the corner. The Fed cut interest rates by half a point today. A Wake Forest expert says that could signal something promising.
I think that there's no doubt that the Federal Reserve has said today, by surprising us with the 0.5% cut, that they feel really comfortable with where inflation is.
Economics professor Todd McFall says he did not expect the Fed to go as far as it did with its rate cut. He says most people will notice the biggest differences in the labor and housing markets. Let's take a look at each, starting with housing. Ask anyone who tried to buy a home recently and they'll likely share a story about difficulty cracking into the market. McFall expects that to change.
I think with the housing market, the lowering of the federal funds rate is going to cause some of that bottling up of the housing market to start to loosen. So if I am if I want to get in the housing market, so I want to buy property, now it's become cheaper to get a loan, or pretty soon it's going to become cheaper to get a loan.
He says it's also good news for sellers who may have been hesitant because of concerns they would not be able to afford their new property. Now to the jobs market. He says the rate cut should bring a little bit of stability to the employment trends. He expects companies to feel more comfortable acting aggressively, which in turn could lead to job growth.